Hello everyone and welcome to Insider Financial Talk Stocks. My name is Alex Carlson. I will be your host today. I'm the editor-in-chief of InsiderFinancial.com, and in this video we will recap last week's market action and discuss our trading plan for this week. But first up, to get our special reports, click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on insiderfinancial.com with your email. After you sign up with your email, you can then sign up with your mobile number. Mobile is the fastest way to get all of our reports, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, be 1 plus area code and number. Never begin the format with 0. It will not work. And after you sign up, you will get a welcome email, which includes a free copy of the Insider Financial Guide to Penny Stocks ebook. Our ebook, our email service, and our text messaging service are all free services from InsiderFinancial.com. We do not run any paid subscription service whatsoever, no Discord rooms or Telegram chat rooms. With that out of the way, let's dive in here. There's a lot to unpack, a lot going on. This week is going to be very important for the banking system. It is the second week since the FDIC seized Silicon Valley Bank and the first since the market's reaction. The plan to deposit at First Republic did not reassure investors. Everyone will be focused on Wednesday, that is Fed Day, Jay Powell's press conference, and to hear what he has to say and what the Fed interest rate decision is. Market participants are skewed firmly towards a 25 basis point rate hike by the Fed. The recalibration in expectations, because it was prior 50 basis point rate hike, has been spurred by the recent turmoil in the financial sector and the ECB's decision to hike rates by 50 basis points. The ECB's move came amid calls for central banks on both sides of the Atlantic to dial back on policy tightening in light of the banking crisis. The Fed will likely echo the ECB message, indicating that inflation is too high, but will use the tools needed to provide liquidity to distressed banks. This will clear the path for the Fed to raise rates by at least 25 basis points, and it's a big question mark. Are they going to signal more rate hikes to come? In the past, the Fed has been crystal clear that the objective is to hit its mandated inflation target of 2%, where inflation running hot much higher than that. One can easily argue that there's plenty of liquidity in the overall system with more than $2 trillion that goes into the Fed's reverse repo facility daily. Now the new Bank Term Funding Program, BTFP, can also be a source of liquidity if needed for the banks. Last weekend, the Fed moved to assuage fears over the stability of the financial system in the wake of Silicon Valley Bank's collapse by introducing the BTFP. Under the new program, the central bank would offer loans of up to 1 year and linked to banks, savings associations, credit unions, and other eligible depository institutions. JP Morgan said in a research note on Wednesday that the usage of the Fed's BTFP would likely be big. For example, by just looking at the uninsured deposits of the 6 U.S. banks with the highest ratio of uninsured deposits over total deposits, all 6 are U.S. regional banks, we come up with $460 billion. The higher the usage of BTFP, the higher the injection of reserves by the Fed and the greater the liquidity relief for the U.S. banking system. So to put all this in perspective, so the uninsured deposits are $460 billion. TARP during the great financial crisis was around $440 billion. I mean, Apple's market cap is $2.4 trillion. That's 20% of Apple's market cap. While the Fed is likely to deliver their last rate hike of the cycle, this is according to Double Line Capital's Jeffrey Sherman, a better course of action would be to tap the brakes. He said, I think they should pause. The old saying is that Fed hikes until they break something. I think it's obvious that something broke here. I mean, just look at bond yields last week. This is not normal, folks. So this is 1 month U.S. Treasury bond yields. I mean, last week went from 4.796% all the way down to 3.95%. I mean, 1 year Treasury yields 5% down to 4.2%. I mean, these moves are just unheard of in the bond market. And I think markets are starting to price in a recession. I mean, just look at crude oil, has just absolutely gotten killed. We're now at 66.93. I think the concern is that the Fed is breaking the back of the markets, and that a recession is imminent. Which, not imminent, but if a recession is coming, the price of oil is going to go down. That means that there is less demand. But yet, right now, the NASDAQ is outperforming the S&P. If you look at just what's going on, NVDA, AMD, NVIDIA is up 73% year to date, AMD up 48% year to date. So there's a lot of these tech names that got hit last year on the back of the higher rates. Expectations now that hikes are going to slow down, possibly a pause, and then possibly further rate hikes. Getting rate hikes later on in the year, that is considered bullish by big cap tech. And if you look at here, the sudden collapse of the Silicon Valley Bank, along with the failure of two other U.S. lenders in the past week, shows that the tightening the Fed began last year is having the intended effect. It's more likely, like I said, Powell will deliver another 25 basis point rate hike on Wednesday. This is according to Double Line Sherman. And, everyone's going to be paying attention to what he says at that press conference. It's based on everything that's happening in the banking system and the volatility in the last two weeks. I think this is the most important Fed meeting of the year. So let's see how it all plays out. Let's see here. Last year, if you look at, we saw crypto firms going under, and this year we are seeing banks going under. It's just a surreal time to be an investor or trader. Bitcoin now is over 27,000. Bitcoin is considered the flight to quality. I mean, people were not making that bet last year. You had all the FTX debacle, the Terra Luna, all the other things with firms going under, people not being able to get their coins off of exchanges. So again, now Bitcoin is a flight to safety trade. It's very difficult right now if you are looking to position your portfolio, and you're trying to look out 1 year or more. If you look at the old traders, Stan Druckenmiller, George Soros, they used to position their portfolio from a macro basis, top down. They would look at, are we long stocks, are we long bonds, are we long gold, are we long energy, are we long commodities, or are we short all those? And they would make those bets accordingly, that they would play out, 6 months, 12 months, 18 months, 24 months down the road. I think it's just very, very difficult to try and, for that strategy to work anymore with the volatility. Things really are changing on a week by week basis, which is fine for us here at InsiderFinancial.com and our subscribers, because we here are traders. We're looking for these moves in penny stocks. We're not really trying to invest for the long term, in terms of dividend strategies, whatever. There's other places that you can go for that type of information. And right now, Silicon Valley Bank, the run on that bank was driven by social media. It was out of business in a few days, and this is going on by the way things are changing, on a week by week or day by day basis. It went with Silicon Valley Bank, it went from everything's fine to just being completely out of business and taken over by the FDIC. You had VCs like Peter Thiel, who has a very, very influential guy. He's telling his firms that he funded to take their money out of Silicon Valley Bank. I mean, that simply caused a crisis of confidence, and $43 billion was pulled in a single day. And, it was, with Silicon Valley, it was just such a fast and spectacular collapse. Now other regional banks are worried about the same thing happening to them. A coalition of mid-sized U.S. banks asked federal regulators to extend FDI insurance to all deposits for the next 2 years, arguing the guarantee is needed to avoid a wider run on the banks. Doing so will immediately halt the exodus of deposits from smaller banks, stabilizing the banking sector and greatly reducing chances of more bank failures. This is what the Mid-Sized Bank Coalition of America said in a letter to regulators. The collapse this month of Silicon Valley Bank and Signature Bank prompted a flood of deposits out of regional lenders into the nation's largest bank, including JP Morgan Chase, Bank of America Company, and Bank of America. Customers spooked by the bank failures were taking refuge in firms seen as too big to fail. So, if you are a small business and you are in a, regional bank in Oklahoma or Texas or Illinois, and you got to make payroll and you got $500,000 in your business account or $1 million, for payroll and for expenses, you're just saying, why am I leaving it in this regional bank? I got to put it at Chase or Bank of America to ensure that, my deposits are secure. But, again, guys, right now, it's just you take things day by day and just evaluate it as best you can. This week, in addition to Fed Day on Wednesday, we have on Monday, NVIDIA will host the highly anticipated GTC event. The 4-day event is expected to cover NVIDIA's latest advancements in generative AI, the metaverse, large language models, robotics, cloud computing, and more. And if you look at just the chart of NVIDIA, just unreal. This one here, I'm looking here at the weekly chart. Let me go over to the daily chart. Let me get a sense here of how things are. We bottomed out here at 140 to start the year and just been on an incredible move this year. In NVIDIA, CEO Jensen Huang, he will deliver the opening keynote. And, shares of NVIDIA have rallied in the week following its GTC event in 4 of the last 5 years. So you got this event coming up, which indicators are that it will be bullish for NVIDIA shares. On Tuesday, we got earnings from Tencent Music, On Holdings, Nike, and Gamestop. Companies that have a very high trading correlation with Nike include Under Armour, Foot Locker, Skechers, Lululemon, and as well as Starbucks due to the China connection. Options trading is implying a 15% swing for GameStop after the retailer's report drops. Of note, shares of GameStop rallied 11% following the last report. And let's take a look here at GameStop. See, I haven't looked at this stock. 1660. This has just been a disappointing investment. We're trading here now near the lows, 52-week lows. Let's see how this week plays out. So if you're looking here this week, how to play all of this. First, as I've been saying over and over again, guys, keep your cash levels high, be nimble, look for opportunities. Second, I know a lot of you, are looking for short squeezes. If you see that on any influencer's thumbnail, just run. Nothing is going to squeeze right now. There's just a lot of uncertainty. People are dialing back their speculative dollars. So, nothing is squeezing. You had Silvergate, which was the highest percentage of the float short. That, is going under. Again, with crypto spiking, I saw a few tweets saying that they thought that Silvergate could pop. Based on that, let's see where it is. It closed 205. I highly doubt it, but let's see how it all plays out this week. Again, if I see anything worth acting on, I will send out a quick email and SMS. So again, make sure you are signed up so that you don't miss any of these alerts, because I just don't have time to do a video for in a fast-moving market. Third, as I said, we are seeing people rushing into Bitcoin and now gold. If you look here, gold, we're just under the $2,000 level. Break above there, and we're going to go and test all-time highs. So certainly we get above, I think, was it 2073? That's where it was last year. It's blue skies ahead. So certainly opportunities there. Personally, I am not long any crypto or gold. It's just not my thing. I'm not a gold bug. Crypto, I've traded a lot in the past. After everything that happened last year, it has really turned me off from the sector. But again, I have to go where the opportunities are, and there's opportunities right now in crypto. So again, I shouldn't be fighting the trend. In terms of the gold bugs, Bitcoin bulls, I mean, they're now saying I told you so. So again, let's see how it all plays out. If you look at just Bitcoin alone, it was trading 20,000 last week, last weekend, to now 27,100, which is just an incredible move here in just a few days. Chief Executive Akbar Thobani, he was saying, he says, the collapse of several banks recently highlights the potential use cases of blockchain technology. What blockchain does is it brings two people that really don't have a reason to trust each other to be able to transact, knowing that the transaction will get done. Generally, banks serve that need where you trust the bank to hold your money and be able to transact. But if that trust wavers even slightly, we saw what happens to banks in less than 24 hours. Bitcoin, again, they're saying QCB Capital is saying showed resilience in the recent turmoil, which may support the argument that though crypto is not in an inflation hedge, it is a hedge against monetary irresponsibility. That's a great way of explaining crypto, because I think as an inflation hedge or digital gold, that argument really doesn't hold a lot of water. But again, as a hedge against monetary responsibility, that makes a lot of sense. And if you look at the money printing that has gone on since the great financial crisis, that explains really why Bitcoin has rallied from under a penny to where it is today. And for a lot of people that are just uncertain about the banks, crypto trades 24 hours a day, 7 days a week, while banks are usually closed and do not process payments over the weekends and on federal highways, federal holidays. So you can get your money out of crypto if, again, you control your own keys and you take your money off the exchanges. What else here we got going on? Like I said, one last thing, a lot of people are trying to do clickbait and, talk about a crash. Anyone saying that the market is going to crash, I'm talking about the stock market, they have no clue what they're talking about. First up, as I said earlier, TAR back in the great financial crisis was just over 400 billion. That's less than 20% of Apple's current market cap. The system is simply awash with money. Go drive around South Florida, Beverly Hills, or Manhattan. It's hard to find a decent house, condo, or apartment under $1 million. People have more money than ever. Can stocks go 15 to 20% lower from here? Yes, they can. But the crash that people are saying, is going to happen, that we're going to drop 50%, sell everything, go into gold or crypto, I'd run away from. So that I don't see that's going to happen. But the one thing I did talk about last week, and the one thing that I am worried about is the real estate market. If you remember the great financial crisis, it started with Bear Stearns and Lehman and then spread to housing. So it really went from Wall Street to Main Street. Last week I warned about the big commercial office landlords. Look at their stocks. BXP, Boston Properties, new lows. SL Green, new lows. Vernado Realty, new lows. So they've just been absolutely decimated. I think there's more pain to come. In terms of penny stocks, there's nothing on my radar right now that I really, really like. If you want to play, two sectors that I think are going to do really well in this environment are of course, the crypto penny stocks and the junior miners. Some crypto penny stocks that, again, I have my eye on. BKKT, 172, HIVE, HIVE, BTCS, RIOT and MARA, M-A-R-A. And I mean, you just look at these stocks, you know, BKKT, I mean, this one is way down. HIVE, you know, these are all still trading near the lows. So they have a lot more room to the upside, and especially, you know, Bitcoin. You know, if you look at the charts, I think the next resistance we're going to run into, you know, 28,000, we get above there, we're going to, you know, 30,000, but we get above 30,000, and I think you're just going to get a lot of FOMO. So I think there's a lot more room that Bitcoin can run. And again, you know, you ask me, well, why aren't, you know, am I holding a lot of Bitcoin or whatever if I think it's going higher? I just really want to sleep well at night, and you know, for me to go and put a good portion of my, you know, net worth into crypto, I'm not going to sleep well. You know, I really hear, you know, I stick to what I know. You know, I know penny stocks, you know, in terms of trading, and you know, if I see something that, you know, along those lines, I can, you know, do a deep dive on it. You know, crypto, it's just not my thing. And you know, lastly, you know, like in terms of gold, you know, it's really gonna make if gold keeps running, where you're really going to make those big gains is in the junior miners, particularly, you know, a lot in Canada. And you know, if you are in any plays that I should look at when it comes to junior miners, please leave a comment below. I'm doing a lot of research looking for plays for subscribers, so you know, if you have a name that you're in that I should look at, please leave a comment below. And again, you know, like I said, when we come across something, we do a deep dive, and you know, we write up a complete report. And if you want any of our reports, the only way is to sign up. Click that link in the description, or go to signup.insiderfinancial.com, or sign up on any of the emails at insiderfinancial.com. You can even sign up and unsubscribe just to see the level of research that we do here at insiderfinancial.com. It's completely free. We don't share your email. You know, unsubscribe anytime. Finally and lastly, guys, Insider Financial and myself are not investment advisors. This video does not provide investment advice. Always do your own research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is our opinions meant for informational, educational purposes only, and does not provide investment advice. Thanks for watching. Good luck, everyone, this week. Also, smash that like button and hit the notification bell to be notified when a new video is uploaded. Good luck, guys. Bye-bye.